Hello, good day. I am Cesar Melendez, Sales and Tech Service Manager for Alte Group in Mexico region. Let's talk about global economy and graphite electrode industry. This is July Market Outlook Review. Global growth is expected to weaken by 2.3% in 2025, making a significant downgrade from previous forecasts, followed by a modest pickup of 2.5% in 2026-27. In the context of a more challenging external environment, growth in emerging markets and developing economies is forecast to be well below pre-pandemic average. Growth in EAP is projected to decelerate by 0.45% this year from an estimated 5% in 2024, as the effect of higher trade barriers, policy uncertainty, and weaker global growth outlook, and softer confidence weigh on investment, exports, and consumption in the region. In China, growth is projected to slow by 0.45%. Growth in Europe and Central Asia is projected to slow by 2.5% in 2025, although growth is expected to edge up to 2.6% in 26-27. Growth in Latin America and the Caribbean is projected to hold steady at 2.3% in 2025 and 2.4% in 2026, as growth weakens in most economies except for Argentina, Colombia, Ecuador, and the Caribbean. On the commodities market, Brent crude price rose to $70.3 per barrel in July 2025. Over the past month, Brent's price has risen 5.3%, but it is still 12% lower than a year ago, according to a trading on a contract for difference. Iron ore fell to $98 per ton in July 2025. Over the past month, iron ore price has risen 4.3%, but is still about 8% lower than a year ago, according to a trading on contract for difference. Steam coal price went to $114 per ton in July 2025. Over the past month, coal price has risen 7%, but it is still 18% lower than a year ago, according to trading on contract for difference. Steel scrap Turkey. In July 2025, the global scrap market showed limited price growth in the most key regions. The impact of unstable demand, seasonal decline in activity, logistic difficulties, and currency fluctuations created a challenging environment. Turkey saw a slight increase in prices amid a shortage of raw materials, while China stood out with an increase in domestic prices despite a decline in imports. Hot rolled coil steel, FOB China. In early July, prices jumped to a high of $455 and peaked $480 around 24th. Hot rolled coil offers from China are influenced by raw material costs like iron, ore, and metal coal, domestic production policies, and changing export rebate regimes. According to a trade view, the continuous contract for hot rolled coil steel, Europe is trading at $625 per ton, which is about 0.5% up over the last weeks. Tin fell to $33,700 per ton in July 2025. Over the past month, tin's price has fallen 0.7%, which is still 70% higher than a year ago, according to a trading on a contract for difference. Aluminum fell to $2,600 per ton in July. Over the past month, aluminum price has risen 0.2%, which is 14% up compared to the same time last year. Zinc fell to $2,800 per ton in July 2025. Over the past month, zinc price has risen 3% and is up to 4.5% compared to the same time last year. Gold fell to $3,300 per ton in July 2025. Over the past month, gold price has fallen 2%, but it is still 33% higher than a year ago. According to the Big Mint's assessments, Indian silicon manganese export prices remain stable, with a 65-16 grade at $938 per ton FOB and the 60-14 grade at $860 ton FOB since the last assessment of 22 of July. Indian ferrosilicon prices surged by $82 per ton to a price of $1,073 per ton. Bhutan prices also increased by $66 per ton to a $1,064. This sudden hike in prices is due to supply constraint arising from power supply to Meghalaya plants being cut and a recent uptrend in imported silicon metal prices from China. Silicon metal prices stood at $1,470 per ton. World Shipping Index. The Freightos Baltic Index global benchmark closed July at 2,370, which is 18% lower than month prior and 36% lower than year high hit in mid-June. Asia to North America West Coast rates, which from mid-May to mid-June surged from 2,300 to 6,000, were back to about 2,300 per 40-foot shipping container by the second week of July. Trans-Pacific rates to the East Coast fell 39% month-on-month to about 4,000, down from June high of more than 7,000 per FEU, which is a 40-foot equivalent unit, but still above the 3,400 per FEU mark held in April and early May. Crude steel producing countries. China, 515 million tons in first half of year, which is about 83 million tons per month, but facing step downturn decline accelerated by 9% in June alone. India, only major producer in this list with consistent growth of 9% year-on-year, boosted by infrastructure, duty protection, and rising demand. Other top countries mostly posted declines in early 2025 due to weak global demand: Japan, Korea, Germany. Japan and US output has shrunk slightly as domestic demand slowed and EAF, electric arc furnace, production rose. Brazil, holding steady despite economic ups and downs, supported by domestic demand and raw material availability. Graphite electrode outlook. Needle coke and low sulfur anode coke demand. In 2025, Chinese producers faced higher import tariffs and taxes, raising costs by $85 to $100 per ton. Port restriction and refinery maintenance further strained supply, especially for low sulfur coke, which remains relatively scarce. Tight supply of UHP grades contributes to high volatility and strong pricing support, particularly in electrode-grade UHP coke. Anode material producers are shifting partly to lower-cost mid-sulfur pet coke due to maturing desulfurization tech and cost control, but still maintain demand for high-purity feedstock for premium applications. Capacity expansions are underway. Sinoma, China, launching a 300,000 line, which is about US dollar 400 million investment. Mitsubishi in Japan, Philips 66, and GTI USA scaling battery-grade capacity from 60,000 to 100,000 tons. Firms are converting existing facilities to UHP output. As an example, GTI is shifting 30% of US capacity. Vertical integration is gaining traction. As an example, Shanshan JFE with a 100,000-ton plant, long-term contracts with POSCO Chemical to stabilize supply for anode production. EAF steelmaking is the core demand driver for graphite electrodes, as global policies and market shifts favor lower carbon steel production via electric arc furnace. China is expanding EAF output from 10% to 15-20%, which is the total crude steel of 2025, pushing electrode demand to 860,000 tons annually. Production expansions. HEG India increased UHP capacity from 80,000 tons to 100,000 tons in Q2 2025. Companies are upgrading to UHP grades, capturing over 60% of the demand. Conclusions. Supply chain shifts. Companies are moving away from over-reliance on single countries like China. Apple's China Plus One strategy has boosted India's roles in smartphone exports, making it the top supplier to the U.S. Tariffs, risking, and trade tension are promoting firms to reassess sourcing strategies. Businesses are shifting from global to regional supply networks to reduce vulnerability. Economic fallout. The OECD projects global growth to slow by 2.3% in 2025, with rising risk of recession. JP Morgan estimates a 60% chance of global recession by year-end. U.S. households could face a 58,000 lifetime loss due to higher prices and reduced wages. Retaliation risks are reshaping global supply chains, pushing firms toward regionalization and dual sourcing. In June 2025, China produced 83.2 million tons of steel, down to 9.2% from the previous year. For the first half of 2025, total output was 514 million tons, making a 3% drop and contributing to a global steel production decline of 2.2%. China is accelerating its move toward low-emission steelmaking, driven by environmental mandates and falling renewable energy costs. The country has installed enough electric arc furnace capacity to produce 160 million tons annually. Though this still accounts for only 10% of total output. Thank you very much for your attention, and we will see you next time in the next episode of Market Outlook. Thank you very much.